We're experiencing historically low mortgage rates, but can this trend continue, or are rates about to rise? Hi everyone, Mike Tilford here, your forever agent serving Ventura and Los Angeles County. And today I'm here to talk about mortgage interest rates and where they might be heading. The average interest rate over the past 50 years is around 7.76%. With current rates under 3%, we are way below that average. Because of this, a huge number of home buyers are out there taking advantage of these remarkably low rates. If you're looking to buy, now is a great time, just saying. With that said, there's no guarantee that these rates will continue to remain this low. There are many factors that influence mortgage rates: the overall health of the economy, the rate of inflation, federal policy, among many other things, all have an effect on where mortgage rates stand. Because there are so many factors and potential catalysts that can have an effect on mortgage rates, making accurate predictions is extremely difficult. With that said, there's one metric that has held up more or less over the past 50 years. That is the relationship between mortgage rates and the 10-year Treasury rate. As you can see, those two lines have moved in a fairly consistent pattern over time, albeit not identical, and the average spread between the two sits around 1.7%. Now, of course, there's some wiggle room here, and the spread isn't always 1.7%. But because of this historically consistent relationship, some forecasters are projecting an increase in mortgage rates as we move throughout the year. But why is this exactly? Between October of 2020 and today, the 10-year Treasury rate has moved up from 0.68% to around 1.29%. This makes the current spread between the 10-year Treasury and 30-year mortgage rate at 1.53%. Based on this, there is still room for mortgage rates to rise in order to reach that 1.7% average that we have seen historically. Freddie Mac came out with their quarterly forecast noting the average 30-year fixed-rate mortgage hit a record low over a dozen times in 2020, and the low interest rate environment is projected to continue through this year. So although rates are projected to increase a bit throughout 2021 and 2022, rates are going to remain at historically low levels. In fact, 4 major authorities agree with this assessment. In addition to Freddie Mac, Fannie Mae, the Mortgage Bankers Association, and the National Association of Realtors all anticipate low rates with a modest increase over the next 4 quarters. Although it is true that even a small change in interest rates can have a substantial impact on monthly payments, these rates are still incredibly low compared to just a few years ago. So what does this mean moving forward? Like I said at the beginning, nobody really knows for sure, but a lot of people who are much smarter than me seem to think rates are going to go up, at least a little bit in the near future. So if you're thinking about making a move this year, you probably shouldn't wait much longer. Well, that's it for today. I hope this video helped you understand where mortgage interest rates are projected to be heading throughout 2021. And if you enjoyed this video, why not check out this other video on my channel? And if you're new here, why don't you also hit that subscribe button so you can stay up to date on all of my latest videos. I guess I'll see you next time, and as always, I'm never too busy for your referrals.